John Kanayo, Head Research and Strategies, Imperial Asset Limited, joins me to help us better understand what happened at the fixed income market yesterday. Thank you so much for joining us.
Yeah, thank you for having me.
Now, the week started off with yields trending higher in the bond space, while the Treasury bill market segment saw some bullish activity, and then we saw the open market operation remaining flat. What do you think was responsible for this trend across board?
Yeah, again, thank you. If you look at the market, especially start from money market, the market started with a positive liquidity state. We saw liquidity closing yesterday at 165.47 billion compared to 520.10 billion recorded on Friday, and that informed what happened at the NTV market.
Okay.
Because there was liquidity was high. We saw ample demand recorded in the NTV, especially 13 October 2022 maturity, which saw a decline in yield by 0.58%, and the price complementary went up, and on the average, yield dropped by 7 basis points. Like you asked, what really happened here was the fact that system liquidity was up, and investors saw that as a means of keying into this very maturity.
Okay, well, let's also look at the fact that the demand at the midpoint of the Treasury bill segment moderated at 5 basis points on average. How do you react to this?
At the mid-end of Treasury bill, okay, like I said, when you see it dropping, what it means is positive, because on the other hand, price is going up.
Okay.
What it means is that some people saw it as an attractive position, and what they did was to take advantage of it, and that equally informed the price dropping lower.
Okay.
Like I said, liquidity position, NCB and money market are driven by liquidity position, where you see liquidity being positive and relatively high. What we usually see is we see interest, especially institutional investors taking advantage of the fact that there is liquid, taking advantage of what they can get from the markets.
Now, what should investors expect in today's session, especially in the Treasury bill market, as investors wait on the primary market auction for this week?
For Treasury bill market, CBN is likely going to be, there is going to be an auction, NTV auction. I don't have that figure for now. There will equally be OMO auction probably on Thursday. I think market will be wary of this, and having it at the back of their mind that liquidity may likely tweak liquidity. I see caution play in the NTV and the money market. Then the bond market, where if you look at the bond market, yes, the bond market was somehow negative yesterday. Drop average yield went up by 1 basis point. We saw demand in the short end of the curve. Mid end was flat. Long end we saw sell-off at the long end, particularly 21st January 20 42. That's about 20 years away from now maturity, going up by 13 basis points. On the average, like I said, it increased marginally by 1 basis point. What are we likely to see in the bond market going forward? In as much as liquidity remains positive, if for any reason CBN doesn't become more aggressive in tricking liquidity, given that yield across board or across yield curve in the bond market are relatively attractive, we're going to see improvement in demand, especially at the long end of the curve the rest of this week. Tomorrow, we likely going to see improvement in demand, especially at the long end of the curve.
All right, the April inflation figures are already projected to rise above 16%. How do you think investors are reacting or taking this information?
Thank you so much. We almost forgot that. Thank you for reminding me that April inflation figure is expected to go above 16%. And, yield and inflation are inversely related. And markets will be wary of this. I see investors paying caution ahead of this number, especially in the bond market. Short and mid-end of the curve, like I pointed out earlier, will be relatively quiet. Why I said a yield that we might likely see improved activity there, long end of the curve, likely see improved activity there. I'm looking at the current yield position across that long end of segment. But watch it, investors are going to play caution across the board, especially knowing fully well that bond inflation number for April is likely to go above 16%.
Well, I guess we'll leave it there. Thank you so much for the analysis, John Kanayo.
Thank you for having me.
All right, have a good day.